Hi, I'm Saurabh Jain. I'm co-founder of Stable Money. We are a fixed income investment platform based out of Bangalore.
So, Saurabh, you are a serial founder and you've been in the startup ecosystem for quite some time. Take me through your journey of becoming an entrepreneur.
I was in Geneva for one of the assignments for a couple of years, and when I was at Fractal Analytics, they sent me to Geneva for a couple of years, and it's always dreamed to be in Switzerland. And I think for one of the visit, I came to India and started meeting some of my friends. And there, I realized that everybody will talk about how's the life in Geneva, and but then I realized that nobody is talking about me. Everybody is talking about some of the friends who are starting up. Some of the friends were part of the Tiny Owl team or the Housing.com team, or the like Ola team, and their stories were so exciting what they're doing, and I was getting a lot of FOMO. I landed in Geneva and decided I have to come back, and that's how. And within, I think within 45 days, I was back in India. So resigned from there, landed a job in Tiny Owl to get back to the startup world. And that's how this started. Obviously, I left Tiny Owl within just 3 months of joining and started my own company. But this story came more from the FOMO piece.
Interesting. And IT Bombay has a very strong founder community which has come out of it.
Yeah,
So I
yeah.
guess the examples were very, very evident for you. And also, like, I mean, you tend to think that if this guy who I knew in college can do a startup, then I can also do a startup.
Yeah,
Okay.
yeah.
So you joined Tiny Owl and you left in 3 months. What was the reason? Was it that you were not feeling satisfied at Tiny Owl, or was it that you were bitten by an idea which you had to pursue?
See, Tiny Owl was always the bridge towards the startup because I was away from the Indian ecosystem for a couple of years, was not aware of how the startup ecosystem will work. So I thought I'll spend maybe a year or two at Tiny Owl. They were also growing, learn something from there, and then move on to my own venture. But I think got one of my best friends to start up with me. He got convinced very early. We got an idea. So all that happened within 3 months. Then I said, "Ki, there is no reason to just hang on to the company just for the sake of duration," and left it in 3 months. Yeah.
And what did you build?
So we built a company called Truce, which is True Price. The idea is that this whole agricultural supply chain everybody talks about, that there are so many inefficiencies in between. So we said that we will procure from farmers and delivering it to the restaurants. It was a B2B kind of a business, farm to fridge, not farm to fridge kind of a thing, but a B2B. So we were helping all these big restaurants and like what we call as a Horeca segment, procure at a cheaper price and a better quality. Because this industry has a lot of transparency issue. They don't know what is the real price, and also farmers are not getting the real price for that. So we started building that first, working in the Maharashtra segment where Nasik and all of that area has a lot of farming, agricultural produce. From there, getting it to Bombay and then delivering to some of the restaurants in Mumbai, and then scaled it to a few more cities after that.
Did you raise money for this?
We did raise around let's say 600K dollars at that point in time, and we raised from some good angels like Titan Capital, Kunal Shah, then some of the early VCs at that point in time. 314 was very early in those days. B Next was very early in those days. I think now they do larger checks in the bigger companies, but we were the early few companies that they had put a bet on. So yeah.
And I guess the IIT Mumbai ecosystem would have helped in terms of being able to connect to investors and also in terms of credibility building.
Oh, 100%. So I think that's been helping even till date. It's very easy to reach out to some of your friends or people that you know to help you connect to any founder or any VC. And that point in time as well, I think that was the major thing. Somebody has connected us to Traction founder Abhishek Goyal from the IIT network only. And he was the first one to say yes to us. At that point in time, I think Traction was doing angel checks as well. So, and that's how it all started. And then not only for the VCs and the idea, just hiring and everything, that ecosystem helps um, a lot.
Okay, interesting. So, what what were your learnings from building Truce? It obviously did not work out, and that's why
Yeah.
stable money. But was it wrong market? Was it timing was bad? Was it like not raising enough funds, or what was it? Because the idea person is something which other companies have done, right? Farm
Yeah.
to restaurant and farm to retailers. So
Yeah.
why did Truce succeed?
Oh, so there are two, three reasons, and I'm still not able to figure out that was it us, was it the timing, or was it the industry? But I'll tell you all the reasons. Right. First is in this agri supply chain, I think we realized that there are a lot of efficiencies. But I think one thing we completely missed, specifically in Indian ecosystem, that in this whole supply chain, there are a lot of people, a lot of middlemen who add so much value at such a low cost. And just to give you some example about this, let's say, for example, we had to build a team and a warehouse where all the vegetables will come in, and there we do a sorting and grading, and then we distribute it to the restaurants. Now you have to employ people, and then you have to do ESIC, PF, everything for that, run it like an organization. But this is done in an APMC in Bombay, Vashi, at a 20 rupees per hour cost, where these vendors will do it at such a low cost. And there are multiple such examples in the ecosystem. So if you have to do it, um, like a very proper organization, I think it will still cost you, and the value that you wanted to add will not be passed on either to the farmers or to the end consumers. So that was one major learning about the problem statement. Second is how we operated as a founder. We were the first time founder, and me and my very close friend from IIT Bombay, we started this. And when we started building the team, we were very, very cost conscious. That okay, build. Oh, this is the requirement. Hire somebody. Find the cheapest resource to do that. And because of that behavior, initially we were very proud of what we were doing. Right, we were running an organization at such a low cost and such agility and frugality, a very small office and all of that. But then what happened is, when things start scaling up, we realized that the team is not scaling fast, right? Because they were just supposed to do that work, and they were maybe capable of doing just that work. And because of that, me and my co-founder had to chip in at so many places, and we got like sucked into that. And honestly, it feels very good when you are busy, right? Like just going from one call to another call, one place to another place, and keep running. But then we missed out the complete tangent that Swiggy and Zomato as companies are scaling so fast. That means restaurants have started adopting to the technology. And if they are doing it for the front end, they will do it for the back end as well. Right. And we couldn't capture that, and just switched on from this idea to something more on a B2B side, which is procuring from farmers and giving it to the vendors rather than giving it to the restaurants. And because of this, um, we had to shut down, move to Swiggy. But one fourth of our GMV company at that point in time got acquired by Zomato and become what Hyperpure is today, which is one of the three verticals of Zomato. And we regret that we didn't stick to the problem statement at that point in time. But yeah, I think there's a mix of these few pieces that have happened, which led to what the final fate for Truce.
When you say one fourth of the GMV was acquired, are you saying that you sold it, or are you saying that they captured that market?
No. So I'm saying that at point in time we were doing around 75 lakh to 1 crore kind of a GMV every month, right? And then we shut it down. We returned the money to our investors and got moved to Swiggy. But then 3, 4, 5 months after that, like a smaller GMB company was eventually acquired by Zomato. So I think that's the piece. Like if we would have continued for some more time, I think things would have been better.
Interesting, interesting. And Hyperpure does this exact same thing, like
Exactly
farm
same.
to restaurants.
Yeah, and it makes all the more logical sense, right? Because see, the biggest problem when you do such kind of a business is working capital, because restaurants will pay you after 30, 40 days. If you want a great pricing from the farmers and a good procurement from them, you'll have to pay them upfront or immediately after the procurement. So then there is a working capital issue. The only place or the companies who can solve that, who has restaurants money, and Swiggy and Zomato have restaurants money upfront, right? So that's, it makes 100% sense to like build this as a business where you can extract more margins from the same business. So yeah, very logical.
Interesting. Okay, and the Swiggy was like a acqui-hire kind of a deal, or like how did
Yeah.
the move to Swiggy happen?
Oh, so when we had raised our first round at that point in time, because we raised this entire 600K into 2 rounds. That point in time, Harsha had pinged, and Swiggy was also maybe just few years into the business. He said he wanted to chat and understand how we do the business. So we had a brief chat that point in time. But when we decided that, okay, this is the money left, and for our kind of our expertise and a business and the tech, whatever limited tech that we have built, who are the logical companies? And because Harsha and I were connected initially, I like honestly reached out to him saying that, hey, this is what we are doing. We want to explore and do the acquisition. And that's the time we got into the meeting with the goal of an acquisition. But eventually, the priorities for them, because they had raised a larger capital at that point in time, maybe at $1 billion valuation. And the focus was on growth and not to digress from food delivery to some other businesses. So they said that, okay, we'll not be able to do the acquisition because this is not the priority for us. So you guys come and join us. So our team was anyway small. So we joined the Swiggy team at that point in time, and the thought was that this business will get built later, but because the growth was happening so fast, that at least for the next 3 4 years, even today maybe Swiggy is not into that business right now.
Interesting. And what was your what did you do at Swiggy? Like, what was how did you contribute to the growth?
Oh, so when I joined Swiggy, my focus was to lead the growth charter, and we were doing 1 lakh order per day at that point in time. The idea is to hit first 3 lakh order milestone and then eventually a 10 lakh order milestone. I was initially part of the central planning and performance team, which works with all the different city teams, see what are the campaigns to be run and how do we drive growth for them. So enabling the bridge between the city team and this HQ team. But then when Vivek Sundar had joined as a CEO, I was asked to be the chief of staff to him. And that's the time we started picking up a lot more growth initiatives. And one of the biggest growth initiatives at that point in time was scaling cities from 10, 15 cities, it was there, to like a pan India presence, like 500 plus cities. And that is the main charter that I led there for almost 9 months, where we scaled it to 530 cities, Swiggy's presence. And we were launching seven, like one city every 7 months, to launching 7 cities a day. That is the kind of scale that we have captured. It's a larger team, around 300, 350 people. Yeah, so that's the second stint at Swiggy. And in the third stint, I was heading the PNL of these, what we call as an emerging India at that point in time, all the newer cities that we had launched, like in terms of how do we drive growth in those cities.
Okay, interesting. There are two different questions I have here. Let me start with this. I am guessing that 80% of the revenue would still come from like the top 10 cities. The remaining 490 cities would together contribute 20% of the revenue. Am I right in that understanding?
Yeah, you're close by. I believe, I also don't know the numbers, but yeah, I think 20 to
Roughly, right?
30% would be, yes.
Okay. Then does it make sense to go into 500 cities slash towns, burn so much money? I mean, why not? Is there enough market beyond tier one and maybe, let's say, another 50 tier two cities?
Yeah, see, the first question is very valid, that why spend so much money to do this? And that was the goal that we had, that how do you scale it to so many cities with the minimum cost? And I'll give you some examples of that. We launched a few cities like tourist cities like, let's say, Uti, where the focus was not to keep the city on forever. We will operate only during the peak season in that city. So that city had no office, anything. There are a lot of cities that we had launched where there is no physical presence of Swiggy. We have onboarded the restaurants, we have onboarded the delivery boys completely digital because these people have heard of Swiggy a lot. So the cost of launching a new cities goes down drastically because at that point in time, Swiggy has done IPL branding and everything. So all people were aware of Swiggy. One another very interesting example is we had when the IPL campaign happened, we had a lot of people across multiple cities downloading Swiggy, but they saw that hey, we are not present in your city. Right? We started calling those people from those cities and saying that hey, we are coming to your cities. Can you help us with the list of 25, 30 restaurants? Which are the important or the big restaurants in your cities that you would like to order from? And that's how we collected the list of restaurants, and then we started speaking to some of these people online. They have heard of us, so it was honestly done at a significantly lower cost. There were cities that we had planned through people who had a very big distribution network for a FMCG product into those cities. Because they have such a high presence, they worked with us and we scaled some of those cities. So the cost wise, we were much better. Second is also in terms of potential. I think there are a lot of good cities which are adding to a significant revenues have come from that. For example, Bhubaneswar, Cuttack. These are some of the cities when we launched. I think maybe it's the 30th or 40th city that we had launched at that point in time. But now is in top 10 cities, hopefully in for the food delivery business. Right. So some of these stars have come from that. And third is it gives you a lot of brand value and see if there are any other potential businesses that can happen. So not maybe food delivery, but a grocery or let's say transport or genie kind of a business, Dunzo kind of a business. Can that work? So there there are some cities where the food delivery business is small, but other businesses are slightly bigger. And then let's say dine out come in and all these come in. It makes a lot more sense to have your presence in those cities. And also at that point in time, Zomato was scaling very, very fast, right? So nobody will lose out the business to the competition just for the sake of cost. So I think at that point in time, that was the call that we'll also go and scale faster to these cities.
Did Zomato also hit like a 500 kind of a number?
Oh yeah, they did. Like so,
Okay.
this Ola, Uber, and Zomato, Swiggy, whenever at peak times, they will all know how things are happening, and everybody will compete very fast. So I think we were also very neck to neck in terms of launching the cities. So the city launch for Zomato used to happen, and then immediately ours, or ours used to happen, and immediately for Zomato. So that's how it used to be.
Okay. In hindsight, I mean, okay, so maybe the first 100 or the first 200 cities would have made economic sense. But beyond those 100, 200 cities, do you think it was a good call to continue to expand to 500?
I I believe it was still a good call to expand, maybe not to 500, but 300, 400 definitely is a good number because um, Zomato is running in those cities, Swiggy is running into those cities, and clearly those cities are profitable right now. The question is whether not spending energy at that point in time and then putting that energy somewhere else could have given you a better outcome. We don't know. But today those cities are profitable. So yeah, maybe today, at least for me, and I don't know these businesses for the last 4 or 5 years now, maybe still a good call.
Okay, interesting. Right. Yeah, I guess you don't want to lose out to Zomato in a city which ends up being profitable, and it's hard to know before you actually go to the ground whether a city will be
Absolutely.
profitable or not. So
Yeah.
you have to take those bets and do those experiments and uh, to discover which are profitable cities. Okay,
Yeah.
understood. Interesting. Okay, so what next after Swiggy?
And so Swiggy was happening all well, going all good. And I was almost like, let's say, maybe I think 30, 32 months in Swiggy. Just one fine day, I got a call from Navi, from one of their HR recruiters. I'm saying that, hey, Sachin is looking for a chief of staff. And I was shocked. Like, first, I've never interacted with Sachin throughout my professional career and how it is landing on to me. But I think they had a very clear requirement that anybody who is from a premium college, who has done a startup and has done a chief of staff kind of a role in the past. And 4 or 5 years back, chief of staff kind of roles were very, very limited. I think now everywhere every company has a chief of staff. We are a very small company. We still have a chief of staff. But so at that point in time, there were very few who would fit into this criteria, right? And I had done that chief of staff role at Swiggy. So I said, why not? I would love to talk to Sachin. I was not very keen at all at that point in time. And then I was telling my parents that this is the call that I've got, right, from Sachin. They're not aware of who is Sachin. It's very difficult for me to explain them who is Sachin. So I've told them that Sachin is like a Modi of startups, right? So anybody who has been into startup world or has done something good somewhere, Sachin has a role to play. So I thought it'll be good to meet him. And then I met him, I met the team, I realized what is the vision for Navi and all of that. Got very excited and got through as well. And then, then I thought it's a good thing for me to do that. And that's something, Akshay, that has always helped me. Like leaving Geneva when things were going well to come back to India. There was some difficult patch, but it all is fine. Then joining Swiggy, I was very comfortable with Bombay. I just had a kid. It was very difficult for me to move with parents and wife and kid to Bangalore. So 1 year I was alone here. It was a difficult time, but in hindsight, it's a good call. I thought maybe there is a pattern. So I thought it's good to jump into a fintech. I have no experience of fintech. And working with Sachin, maybe it could have an exponential benefit. So I took that call. A no regret move, because if things were not working, I would have anyways come back to Swiggy. So joined as a chief of staff there, and the initial few months were difficult for me to settle down because every person has a different style of working. Versus Swiggy versus Sachin was a different, to understand that. But then that gave a lot of exposure, and the time at Navi was really exciting. So that's how the switch happened. And if I have to go back and see all these things, I would have made the exact same moves I've done.
Okay, interesting. Can you zoom in a bit on the chief of staff role?
Yeah, so chief of staff at a Navi was very unique because Swiggy, the expectation from Vivek was that I get involved in some of the key projects, do that execution end to end, and then hand it over to the respective team depending upon the outcome that we have from that, right? So it was a lot of involvement, and I'm more of a doer than just thinker and working with the stakeholders. But when I moved to Navi, Sachin was very clear that I don't want my office to be the bottleneck. There are enough people who are supposed to do the work. The decision making should happen faster. So the buck should not stop at me. I think they should keep doing what they're doing. So it was just more of an stakeholder management and seeing if there are any bottlenecks there which we can solve for. So that's the thing. And then Sachin is also very hands-on. So he was involved in everything. So managing that was critical. And I was also not coming from that background of fintech. So for me, every meeting was a new learning. So I was not contributing so much. And there were a lot of acquisitions were happening at that point in time. There was a DHF and insurance acquisition that we were doing. There was SL mutual fund acquisitions that we were doing. So there was a lot of other work than the core business that we were supposed to do. So I was involved in that. But then that gave me a very good idea from a high level in terms of how some of these fintechs work, and specifically lending, because we had started lending just at the peak of wave 2 of COVID. It's a very difficult call, but how the product shaped up and how the teams were managed, I think that was a great learning. And so that was a chief of staff kind of a role, and that gave me a very good understanding of how Sachin also operates, right? So the best part is, if you know how your executive works, is when you move from a chief of staff role to any other business role, I think it makes this very, very clear for you, or very, very efficient for you, because you know what is expected out of you and how the person works, right? So that doesn't give you, so you have a lot of cushion in terms of how you want to operate. So I think for me, going from the chief of staff role to the CEO of Navi Mutual Fund, I think I could do much better in the newer role just because I was chief of staff to Sachin before that.
And I guess typically a chief of staff role does open up a leadership role for people at a fairly young age, right? Like somebody who's
Yeah,
spent a couple of years in chief of staff has the trust of the
yeah,
founder and can get into like a CEO role at a fairly young age.
yeah. Because you have so much face time with the founder or your executive because and otherwise you can make certain mistake, but because you don't have so much face time you can't correct some of those things, right? But you have so many. So I had a long rope as chief of staff with Sachin, so made a bunch of mistakes as well, realized, corrected it, and it's very visible for the founder as well to see that improvement happening, right? So that builds a lot of trust, and that's why the movement from chief of staff to a larger business role happens much faster. And to me, I think it happened in just 7 to 8 months, and it's very,
Wow.
very unexpectedly. Just one day, Sachin said that, "Hey, acquisition is done, and why don't you take up the role as a CEO of Navi Mutual Fund?" I was, yeah.
Amazing. As a founder, how should one think of a chief of staff? Like, when should a founder hire a chief of staff? What should they hire for?
I think there are two major parts, right? First is you want to just do the program management after the things, and you want somebody to be part of everything so that that person can connect the dot across the multiple meetings, multiple initiatives that are happening, and keep building a bigger picture for you. I think that is a good time to have a chief of staff. Another good time to have a chief of staff, or the kind of person to have a chief of staff, is where you have worked with somebody, have a lot of trust and value a lot of feedback from that person, to have him by your side as a chief of staff and keep brainstorming with that person, because you can't do that with everybody in your team because just the time constraint. So I think these are the two reasons for which I think you should have a chief of staff. Like, initial, for almost till 2 months back, we had no chief of staff, right? Because I was also very actively involved into things that are happening, and there were honestly not so many things that were happening. But now, because there are so many things happening, and you're realizing that the team size is slightly bigger, and it's difficult to communicate everything that is happening, I think having somebody as a chief of staff could help. Also, our vision to get chief of staff is have somebody early who can see this entire journey, and then at the later stages can get into the business role as well, right? So you also start building your talent pipeline, where you first get somebody as a chief of staff, spend time with that person, and then move into the business role as per the capabilities.
Wow, that's an interesting perspective on why a founder should hire a chief of staff early. Amazing. Okay, so what was Navi's vision, or
Navi's
rather, what?
vision, so Navi's vision at that point in time was to become a bank, like a new age bank, where, like, if HDFC has to be built from scratch today, how will it look? It'll look very tech enabled, very customer focused, depending upon the needs of somebody who is using Zomato, Swiggy, Ola, Uber, and so many apps, right? So that's the vision that Navi had when we started.
Okay, and the way they wanted to build it was through a mix of acquisitions and organic. What all acquisitions has Navi done till date?
So Navi had acquired an NBFC through which they have done the banking, applied for the banking license. Navi had acquired SL Mutual Fund and DHFL Insurance. Like, all this is public info.
So the pieces of a bank are savings and lending, largely speaking, and of course,
Yeah,
like facilitating payment transactions and so on and so
right,
forth. So
right.
probably the facilitating payment transaction piece is not there so much because they don't have a banking license. But lending is through the NBFC, savings is through the mutual
Yes,
funds that they've acquired, and
yes,
insurance
yes.
is again somewhat savings related. Okay,
Yeah. And
interesting.
see, I think Navi had that benefit of capital, that you can start thinking of a bank from day one, rather than waiting for the license to come in and then slowly start building it over the next 5 to 10 years, right? Sachin's vision was to do a lot of things and front load a lot of these activities, and we could afford at that point in time. So that's why some of these acquisitions also happened.
And Sachin had his capital from the Flipkart exit to invest here. So
Yes.
I don't think they've raised external capital, have they?
Nothing that is in public. Maybe I think
Okay.
some very strategic investments.
Okay. Okay. Understood. Though, do you think Geo BlackRock will kind of do what Navi's vision was?
I don't know about Geo and BlackRock, but um, honestly, there are very, very few people, Akshay, that I've seen who are so customer backwards, right? Not everybody thinks about customer so deeply how Sachin thinks. So मुझे लगता है कि that will always be the benefit that Navi will have, or whatever that Sachin does, uh, to understand the pain point and build it very simply for that customer. People will catch up, but it'll always be a catch up game against Sachin. So I think he will have that benefit for sure. Obviously, Geo BlackRock has a lot of benefit in terms of the reach and the brand value.
And the capital.
So yes, and the capital. Yes, but I think customer backwards thinking is what I believe is the biggest moat for Sachin.
What does this customer backward thinking look like? Give me some examples of how you saw it in action at Navi. And how does that become a moat?
Yeah, so I'll give you one best example, right? So at Navi, we were doing a brainstorming on what should be the 10-year vision for Navi Mutual Fund, right? And as a CEO, we were putting a lot of data together in terms of how it happens. And we realized that the rate at which, like, FD has a 250 million users, right? And mutual fund, after so much of mutual fund sahi hai kind of a campaign, it's still at a let's say 30-35 million users, and very few of them are active because people are trying and then they are churning, right? And we went deeper into that and realized that the biggest problem about mutual fund is the complexity. Like, people don't understand the mutual fund really better, that what is a blue chip mutual fund, what is a asset allocation mutual fund, what is a different segment mutual funds, like, because which stocks come in and who decides who takes a call and all of that is very difficult for the customer. I said, Kia, we want to build something which is very, very simple to understand. And when it comes to market, people understand um, the index really better. And that's how we got into that. We will build only index fund, the fund that is very easy to explain to somebody, okay, why it is doing what it is doing right now. That if Nifty is up, your fund is up. If Nifty is down, your fund is down. But Nifty over the last 10 years has given you a CAGR of 12-13%. That's what you should expect. Keep here for a long-term period. We don't get into the nitty-gritties of who is the fund manager, what is he thinking, and a lot of these meetings and sessions with the customers or the distributors. He said, we'll not do all of that. We'll just build this. Now, the second question is barrier to entry. That currently it has a 50 rupees is the barrier to entry. 500 rupees is the barrier to entry for a mutual fund SIP. And this is being defined by the mutual fund companies. He said that I don't want this. I want somebody to try with a 10 rupees, a mutual fund, right? And that's how then we introduce that we'll do passive funds, and then we introduce that you can invest in Navi mutual funds at 10 rupees. And that has been a very big hit for Navi mutual fund. That now people are investing with 10 rupees, try, build trust, see that money growing, and then start putting in larger and larger amounts into that. So I think, and this is one of many, many examples how he's been thinking. There are examples in insurance, there are examples in lending, but we've been closer to the mutual funds, and these are few of those things how we thought about customer backwards and not thinking business. Because if you think very honestly, you don't make significant money in passive funds, right? Because the expense ratios are so low. You make major money in the active funds. But the strategy was different, because the idea, the vision is to become vanguard of India. and not be just one of the slightly profitable mutual funds that exist.
Okay, interesting. So instead of focusing on, like, a lot of businesses want to optimize processes, and so they want to do things which are uh, like quick to execute, and irrespective of what is the customer convenience. Like, the
Yeah,
business convenience is generally in mind first. So Sachin has the opposite approach of customer convenience first, and the business will
yeah.
figure out a way to make it work. Interesting.
Yeah, and he
um,
has done that, right? He has done that at Flipkart, where the large business was eventually made, where they introduced COD, which is very counterintuitive at that point in time. So, idea is if you solve for the customers, you will be able to build a larger business out of that. And Swiggy, like
Interesting.
Navi Mutual Fund, has scaled from almost zero AUM to maybe today at a 5,000, 6,000 crore AUM very fast.
And where does that put it in the rank of mutual fund companies?
Oh, I don't have right
Broadly, like,
now,
is
but
it top 5, top 10, top 20? Like,
no, I think top five, top 10, but yeah, definitely in top 50.
okay, okay, understood. Um, so, for people who don't understand some of the terms that you use, like index mutual fund, active mutual fund, passive mutual fund, the how a mutual fund earns, what is Vanguard? Can you just do like a 101 on that?
Sure. Yeah, so see, mutual funds are of two types. One is active and one is passive. Active is the mutual fund where which stocks to buy for that specific mutual fund is being done actively by an individual, which we call as a portfolio manager. So there is a portfolio manager who decides that for this specific mutual fund, my bet is on these stocks. I will buy it at this particular time. I'll sell it at this particular time. Right. So that is that individual's call that is being used, and then whatever that those stocks that he bought or sold or she bought or sold is the return passed on to the customer. So that is actively managed. Passively managed, where there is no active portfolio manager who is deciding which stocks to buy or not. It follows an index. An index is like Nifty 50 index, where top 50 market cap companies of India are part of that index fund in a certain proportion, right? And then as that index moves ups and down, up and down, the return of your funds will also go up and down. So if some stocks gets into top 50 or exist top 50, that's when you buy or sell that particular stock. So it is being passively managed. It is how the index move is what you move. So you don't rely on individuals' capability or decision making to give you the returns, and that's the easiest way to run a fund. And because it is passively managed, the cost of managing that fund is low versus an actively managed fund, because there is a person whose cost is also added to that fund. And generally how mutual fund companies earn is whatever is the cost of managing that fund, right? That is first is being you get it from the customer, plus there is a profit on top of that, right? That is being added. So what we call the cost of managing fund plus what the commission that mutual fund will earn, together it is called as the expense ratio. That is very low in passive funds versus in active funds.
So, you're saying expense ratio is not a fixed number, but it's something fixed plus a profit share. That is how an
Yes.
expense ratio is.
Yeah.
Okay. So funds which are performing well will have a higher expense ratio by default, because profit share will come in. And
So
okay,
it's decided
understood.
by the mutual fund because they can afford to charge higher, because they know that they are giving significantly higher returns to the customer consistently over a period of time. And there are some who keep it low, because that
Okay.
whatever they are charging comes out of the profit that the fund is earning, right? So if they charge more, the customers will get less. If they charge less, customer will get that much more.
Okay. And tell me a bit about Vanguard. Why did Navi want to be the Vanguard of India? Why is Vanguard a big deal?
So Vanguard is the largest mutual fund based out of US. That was the first mutual fund who introduced the passive investing into the US, which at that point in time was very scrutinized that it will not give result. But over the next 10, 15 years after the launch, I think that is the most profitable, has given the highest returns to the customers, and people have switched from the active funds to the passive funds. So a lot of inspiration across the globe about how the passive investments operate, or maybe to India as well, has come from the learnings of Vanguard. But the only thing is, Vanguard also operates as a significantly smaller cost, but the scale is so huge, is that you start making money. And the idea for us to be the Vanguard is that it's very difficult to take that call in a short term, because you will not be profitable as you will be with running an active funds. But if you are able to capture the largest pool eventually, I think that's where it'll start making sense. And all the profits that you have foregone over the last 5-10 years, I think you'll start making that within few years with the scale.
Okay, understood. How does a index mutual fund build market leadership? Because every other company offering an index fund is offering the same product. There is no product
Yeah,
differentiation as such. So how
yeah.
does one fund build market leadership over another fund?
Yeah, see, I think this is a very interesting question that we were also discussing a lot internally, that if, because everybody has a Nifty 50 index fund, right? How will you create a differentiations? So I think the first differentiation that we had was on the cost, that we will be the lowest expense ratio in this. So we will almost charge zero to the customers for operating or running that fund, right? So that gives us a significantly a good marketing tool or a good go-to market, saying that we'll be the lowest. And all the index funds are same. So why invest in a particular fund who is charging you higher? You invest in other fund who is charging you the lowest, right? So that's being the strategy, and that's still continuing. And some of the
And
pieces like
what is the expense ratio for Navis versus others?
Navi expense ratio when we had launched was around, I think, 6 to 7 basis point. And that
Okay, which
point
is
in time, the next
0.06.
best, yeah, 0.06. And the next best at that point in time was maybe at 30 or 40 basis point.
Okay, 5x difference. Okay.
Yes.
Before this episode, I did run a search on a couple of investing apps like ET Money and a couple of others on Nifty 50. Uh, Most of them were not showing Navi on top. And I think there is a bias towards longer running funds because they like show you 3-year returns or,
Sure.
so funds which don't have the 3-year return to show don't show up.
Yeah.
Otherwise, all index funds are the same. So there's no reason for an app
Yeah.
to recommend one over another. But
Right.
I think just that having that legacy was probably helping the other companies to come up on top.
Yeah, and that's where I think actually that you will see that after a few more years, I think Navi will start ranking top across all the channels. And the other strategy, I think, other than the cost, was how do you introduce the newer funds? Like for example, we were the first one to get Vanguard to India, and how you do that is you take a Vanguard fund and you create a fund of fund on that. So what it means in a layman term is, if I have to invest into a Vanguard's largest fund, which is all US market, right? Which invests into all the US stocks that exist. I can't do that. But now Navi has created a fund of fund where you invest in that fund with your Indian rupees, and Navi will in return invest that into a Vanguard fund, right? So the uniqueness on the products is critical. So we had filed for a 17 very unique funds or themes at that point in time. We introduced EV as a theme, and we introduced Vanguard Total US as a theme. We introduced, I think we were working on a Total India also as a theme. So I think uniqueness on the products can also help you, because there are a lot of people who have belief in certain segments of the categories, right? There are a lot of people like us who believe in EV as a segment eventually, right? So how do you get opportunity to invest in some of those things? The best way to do that is through passive investment.
Okay. Although that again brings in subjectiveness, right? Because the EV fund would not invest in all EV companies. Someone would take a call that these are the top 10 EV companies we want to invest in.
Yes.
Okay. Interesting. Though I guess that's more for a slightly more involved, engaged investor rather than a
Customers,
lay
yes.
investor. Lay
Yeah.
investors, for them, the best is to just invest through an index fund.
Yeah. So that's why Nifty 50, Nasdaq, S&P, Total US, I believe will still be the largest AUM funds.
How much is the expense ratio when you are investing in like say the Nasdaq or the total US? Because there'll be some cost of currency conversion and things like that, right?
Yeah. So the cost of currency conversions will remain for every foreign funds, but there are certain rules, and I don't remember the exact rules, that whatever is the expense ratio of the base fund, you can't charge 2x of that. You can't charge more than 2x of that. So that leaves you with whatever you have to give to that, and in that remaining one, you have to manage all your expenses. And there are certain fixed expenses like RTA cost and all of that cost, right? So
What is
it doesn't. RTA is all the registered transfer agents like KFINs and CAMs who manage this portfolio and ensure the redemption purchase are happening seamlessly. These are the back-end operations for all the 32 mutual funds that exist. So for every
they
fund,
manage the investment part or the
no,
investor
they manage the operations part.
operations of what, of investing or of onboarding investors?
Onboarding investors, ensuring that their
Okay.
KYCs and everything is there, allocating the NAV, calculating the NAV, what is the NAV of that, and then showing the returns. If somebody redeems, ensuring that redemption happen at this rate. So calculating the total value basis NAV and transferring that amount. So there is a lot of operation works, and these are larger companies, KFIN and CAMs. So there are certain fixed costs. So eventually, and that's why there is very less leeway if you do a fund of fund, and that's why nobody was doing Vanguard. It's not something new that we introduced, but because there is no scope of earning anything there, nobody was doing
Okay, but again, the bet was that we can take losses for a few years. Eventually, it will be large enough to uh, become profitable.
it. Yeah,
At scale, it will be profitable.
yeah.
Okay, okay, understood. Interesting. Okay, so what next? After what made you want to move on from Navi?
So I think having seen Swiggy and Navi is where the realization came, where that as a founder, for the first time founder, that we were at Truist, right? We made a bunch of mistakes. We were not doing things right. We didn't evaluate the market really well. We didn't build the team really nice. And there is always that urge to go and start something and not do the same mistakes again, right? And I think that became stronger and stronger after seeing Harsha and Sachin, how they operate. So always wanted to do that. And doing this stint gave a lot of confidence that maybe this is a good time, and you always should start when you are at high of your confidence. And personally as well, I was at a good place. My son was a 7-year old, so at least I can take a 2-3 year putting little hard work into this. So I thought this is a good time. There is no point of delaying this. The only question was the market is not, the investment market was not at its peak. So raising funds could be difficult. But that also means that people like us who are a little frugal can build a sustainable business for a long period of time, and some of the good talent will be available at a cheaper cost. So keeping some of these things in mind, I spoke to Sachin and said that I wanted to start something of my own, and we then took some time to close what I had to finish, and then left Navi at around July 22 with almost no idea what I wanted to do, but wanted to do something in fintech, having seen Navi mutual funds so closely for such a long period of time. But exactly what to be done was not very clear. But I'm also that person who have in the last 13, 14 years have not taken a break, right? The day I left Geneva and landed in Bombay is the day I joined Tiny Owl. Similar happened between Swiggy and Navi, and similar happened between Navi and now. That the next day I started going to a WeWork and started thinking about what I have to do next, because I can't sit idle. So yeah, I think that was the reason why I honestly left Navi without a very clear idea in mind. Because as I've seen in the past or have heard, is that you will not have a very strong or concrete idea that you have to work on. It will always keep changing, right? So don't wait for that idea to come to you and then you leave. I think you'll have to take a move sooner than the idea hits you.
And tell me that journey of discovering the idea, the market, the product.
So I left in June and then started looking at the first task was to obviously reach out to the folks or the mentors that I've always asked for, and started talking about how to build, what is the market, how's the market right now, and what are some of the open ideas, what are some of the learnings that they have worked on that has not worked. And I clearly figured out that in India, fintech has a very good potential. There are a lot of opportunities that are there, and even if you pick up a very small segment in India, that itself is such a large audience that you can build a business just on that, right? So fintech give you that opportunity very quickly. And obviously, there are a lot of solutions on the credit side that has been built. There are a lot of solutions on the payment side that is being built. So that makes it all the more easier. And second is I've started looking through my notes of my customer calls through Navi Mutual Fund and realized that what has come out of that and what can be built through that. And that's where I think I realized that something on the wealth or the investment side could be an interesting piece, with a clear caveat that in a wealth business, whatever businesses have been built, either they have built like a very dhanda business that caters to very small audience, but you make large commissions out of that. To do it at a scale is a little challenging because the commissions that you earn is significantly lower, but the cost that you incur to acquire a particular customer is significantly higher. So sometimes the cost doesn't justify the lifetime value that the customer will bring to the company. And that's where a lot of companies fail. And we were cognizant of that fact. And in that mid of those things around September, I spoke to my co-founder Harish, who is a very dear friend from college. We've known each other for now, let's say 15, 17 years. In a college time, we had run a very small venture just to earn some pocket money at that point in time. I reached out to him. He's also from a hedge fund, so very close to the Indian markets. And he was also at a time where he said that maybe we can start something. And that was a very quick call for us that, okay, let's start something. And talking to him first to finally getting him on board and to eventually going and raising funds was a just maybe 15, 20 days affair. It happened very quickly for us. And the idea was to build something on the wealth side. The only question was, what will be the go-to market for you? Because that go-to market will define at what cost you will acquire the customer. And that's where we realized that despite there is a lot of um, focus on the stocks markets and the mutual fund, there is a large segment in India which is still very, very risk averse, who is not prone to this stocks and the mutual fund kind of a thing, even if those products are very simplified right now. These people will neither try this because their focus is that this is very hard earned money. I don't want to put into this money because they have built that wealth over a period of time. And there is so much fear of losing that money and going back to those times when you had no money that these people will never take risk. And that's why you will see that lakhs and lakhs of rupees are sitting to the deposits and the savings and the gold or the real estate because they have seen that this is the safest asset and you will have a lot of liquidity here. Or people who have tried stocks and mutual fund just to try, and then because of the market, the nature of the market, they have seen some negative returns out of that and quickly churned, right, and gone back to their natural whatever appetite. And we said that this is a very interesting opportunity to capture, and because so much innovation happened on the mutual fund and the stock side, the whole fixed income vertical has not gone through so much of product innovation, right? The FDs are still happen in a very traditional way. There is still a lot of opaqueness around how the breaking works, what are the charges, and how the FD rates are calculated, and what is the best FD to invest into, or similar around gold or any other fixed income assets. So he said that this is an interesting white space to get into. And in that specific piece, fixed income is all the more critical. Fixed deposits or FDs is very critical because there are 2-3 tailwinds that we see. Today is interest rates are at its peak. So people can still earn 9.5 kind of interest rates on FD. Second is the insurance for FDs has gone up from 1 lakh per FD to a 5 lakh. And there has been a lot of noise from RBI, from influencers and everything that are now insurance is 5 lakh. So people are aware about those insurance. Third is a lot of these banks who got the small finance bank licenses in the past, or there is a high need of deposits for such banks, right? So, and they have built the technology that is required to reach out to the customer. So we said that this keeps us in a very nice space where nobody's focused on fixed deposit. Can we create a very nice or unique positioning for ourselves with that? So with that thought process, we started stable money, and the first product was fixed deposit. Uh, we launched the product in the month of August 2023, but the idea we started working from Jan.
So, a simplistic way to describe stable money is the way you have, let's say, like a ET money for mutual fund investments. You have stable money for putting your money into FDs.
Yes.
Okay. Uh, while you say that the product has not innovated much and it's a complex, opaque product, so on and so forth, but honestly, as a lay customer, if I am using any of the new age kind of banks, like say an ICICI, which has an app, uh, it's just a couple of taps on the app to put your money into an FD. Why is the experience broken?
Yeah, so I'll tell you a couple of examples. First is there are 50 lakh searches happen on Google every month just to find out the rates of FD. And it's not easy, even if we are having, like I personally work a bank with HDFC, to find out what are the FD rates of that banks. It's very cumbersome process. I'll have to go to net banking. In that as well, there are multiple tabs and figure out, okay, what is the highest interest rate today that is being available. Second is I don't know when the rates are changing and how I should switch, right? I still don't know that my FD is earning the highest interest rates or the lowest interest rates that's available. If you have to break FD at certain point in time, it's very difficult or it's the most complex process to understand how the FD rates are or your returns are calculated when you are prematurely withdrawing the FD. If you want a certain liquidity, then why do you put the entire money into a 5 year FD? और अगर बीच में चाहिए होगा तो then you will have to break that FD and that will not give you the best returns onto that. So though it's the India's favorite asset class and so many FDs are there, right? It's still there are a lot of these small nuances that we understand about, let's say, mutual funds or stocks that we don't understand about uh, FDs. I think those are the reasons why we thought that this needs to be solved. And second is on the tech side as well. Aaj, if you have to open FD at any of the bank, you'll have to go and maybe open savings accounts with most of the banks first. And then we all know managing that savings account is a complex process because every time you file for the returns and everything, you have 5, 10 savings account without even realizing that, right? That's why a lot of people don't do this. So we have solved that through tech. We have solved very easy liquidity through technology. So yeah, though this is a very well-known product, this is or we believe that we can do a very quick transactions onto our app, but there is still a lot of inefficiency that exists. And I think to you and me, Akshay, this doesn't um, what do you say come very naturally because our focus maybe your focus also is more on the mutual fund and the equity side, that you would know today we are sitting and how much you have earned or lost in your mutual funds today because we open that app, quickly see it. But you do that with FDs, right? But the segment that we are talking, they are so managing FDs actively that for them so many nuances that we spoke about are very very critical, right? And that's what we identified. And when we tell them that, okay, this is what the highest interest rate FD is, this is how much you earn extra when you break your FD and reinvest at a higher interest rate FD, right? They see a significant value in that.
Interesting. Okay. So, what are the ways? So, I understand one big value add which you mentioned, that if as a lay investor I was to find the bank giving the highest rate of interest, I would necessarily need to open a savings account there first, and that process is cumbersome, time taking. The additional cost of managing multiple accounts, etc., all of that comes in, which I've seen my father do. My father is like your exact TG. He will never invest in FDs, but he sorry he will never invest in mutual funds, but he invests in FDs and he does active management. Like once every 3 to 6 months, he will change where he's put his money because some other bank had a better offer, and he knows which is the best bank and which bank gives you some senior citizen better interest rates and so on and so forth.
Yeah.
But yeah, he has multiple accounts in multiple banks to leverage best rates and so on and so forth, which you have removed that necessity, and you are able to direct money directly into the FD without a person needing to. So the onboarding has become a lot easier. Uh, how have you made the other things easier? Like you said, liquidity, you made that easier.
Yeah.
And what I understand, you're also saying that rebalancing is also something which you have automated. So just tell me a bit about these things.
Yeah. So, for example, on the liquidity piece, anybody who books FDs onto our platform, they'll be able to redeem that FD and they'll know exactly what is the penalty that is being charged to those customers and how much you will earn or how much you will lose if you prematurely withdraw. So, that gives complete information and you can do it with a single tap onto the app. Second is in terms of rebalancing or moving this. I think there is limited scope because we don't have access to the existing accounts of the customers. But what we give is an information. Let's say if I know that, hey, Akshay has an account in ICICI, I will keep him updated about when the rates are changing in ICICI. You'll be able to track FD onto our platform where we can tell you saying that, okay, even if you break your FD in ICICI and reinvest in ICICI, you'll make so much more. So giving that information to people and putting all these 200 banks onto the platform where we tell you the rates was the biggest power that we saw we could enable for our customers just with the information.
Okay, interesting. Uh, how did you build the backend for this? How do you allow people to invest in any FD without them needing to open a savings account?
Yeah, so you can. So there are three, four types of accounts. There is a current account, a saving account, there is an FD account, and there is a sovereign account. There are three, four, maybe slightly more. But so this feature was always there, but obviously banks wanted to do FD with the savings account first because then you are able to build a deeper relationship with our customers, right? With some of the banks where the deposit needs are higher, we have done the integration to make sure that let's just focus on FDs and trying to get a deposit and not on the savings account right now. So that's the tech integrations that we have done with the banks. And now you will see that that's been a trend also happening that with Axis Bank as well, you can open an FD without a savings account. And there are multiple other banks which are opening this as a feature because the focus is more on getting the deposits, not opening the savings account.
I want to dive a little deeper into the back end of
Mhm.
this. I'm assuming for mutual funds, there is some easy centralized way for a new app to come and start distributing mutual funds of all fund houses. Like, how does that happen?
So in mutual fund, there are some entities who gives these APIs where you don't have to go and do it individually with the mutual funds. Like RTAs, both KFIN and CAMS give you pipes to do that integrations. Then there are some other tools like BSC Star and few more who also are built onto these RTAs who can give you uh, these pipes to you. The best part is because the entire operation, the flow of money and the flow of mutual funds happens through the RTAs, which are just two in the industry. It is very easy. But when you do it with the bank, every bank has a different integration, and that takes a lot of time. And that's why you will see that, let's say, whether it's a new bank or anybody or credit card, all of this been done with the specific banks for all the fintechs. You can't do it with the multiple bank, and the same case is with us as well. That if we have to onboard, let's say, more banks onto our platform, we'll have to do a compliance check with each of the banks separately. We'll have to do the integrations with each of the banks separately, and those integrations also varies because everybody has a different ways of doing these integrations, plus purchase, redemptions, applicability, payment gateway, everything is very different for these banks. But then that's what also makes it a moat, that you do these integrations so that it becomes very difficult for maybe the next set of people to come in and do that.
Um, You said you have access to 200 banks as on date. Like you can show the interest rates of 200
Yeah, we show
banks.
the interest rates.
Have you integrated with 200
No,
banks?
we have.
What is what?
So we are more
Okay.
like a
Hmm.
Google for the FD rates for these 200 banks, where we get the data about these 200 banks either manually or through scraping or their websites that we update real time onto our app. But there is no integration. This is more like maybe the Bank Bazaar days, which still does it for 10, 15 banks and show you the rates. It's more like that.
And how many banks have you integrated with?
We have currently integrated with two NBFCs and three banks. We are in process of integrating with 4 to 5 banks more. So maybe in another 6 to 8 months, we'll have all the 10 banks live onto the platform.
And these are like the small finance banks or even the large
Oh, these are
banks?
a mix of small finance bank, large banks, and the mid-tier banks as well.
Give me some names. What are like a year down the line? What names could we possibly see?
So
Banks, which
in
is
the
there.
top tier banks like HDFC, ICICI, Axis, Kotak, these type of banks, we're trying to get some banks from these range. And then there are middle tier banks, which are maybe, let's say, the Federals, IndusInd, Yes Banks of the world, which is the middle tier bank. And then there are some 12 small finance banks, so that list is there. So we're trying to get a few banks from each of these cohort to be onto the platform.
Okay. Okay. Understood. Uh, is 10 a large enough offering? Like you said, by the end of this year, you'll have 10 options. Is that a large enough offering?
See, this question I think we are also thinking about that beyond a point, adding more banks onto the platform, does it have a high marginal utility is the question. Or people have ranges across all the banks or the interest rates across these 10 banks. Adding more banks will have interest rate matching with some of the other banks, right? So will it add so much of value is the first question. But the counter to that is people have large amount in FDs and they want to diversify in 5 lakhs multiple FDs across these. Right? So if somebody wants to put a
Because the insurance limit is
yeah,
5
so if
lakhs.
somebody wants to do 50 lakhs, 10 banks will make sense. And somebody wants to do 5 lakhs, maybe that entire 5 lakh in one bank makes sense. But also people have a behavior of even if they want to put 5 lakhs, they'll put it across 2, 3 banks. Right? Though they know that this is safe, but they still want to make it even more safer by diversifying. So that's been the behavior that we see. But we believe 10 banks would cover us 80%. And then every bank that we add beyond that will have lesser marginal utility.
Okay. Um, so for these 10 banks, you had to go bank by bank and talk to somebody in the relationship team there or somebody in the CXO
Yeah.
level to kind of have a handshake and then move ahead with the integration. And therefore, you have built up a.
Yeah.
There are these fintech infra companies, some of whom I've interviewed, like say Kite,
Yeah.
Decentro. These companies are not offering you a way to like avoid going bank by
No.
bank.
So these companies are also, some of these companies are also building infra, and we are talking to them as well to do these integrations faster so that we don't have to work upon this. See, the benefit of these infra player is that it helps you go to the bank faster because they have maybe deeper relationships and they have built this already. In some cases, it makes sense to you do that because your relationship will get deeper and you will not just do FD, you will do multiple products over and above that. So ideal is to have a mix and match of these both.
Okay, okay. Though if like a Decentro kind of a company was offering this to anybody, then your moat would be a lot lesser. So you would want to also have exclusive arrangements to
Yeah,
have a
but I'll
stronger
tell
moat.
you,
Okay,
Akshay,
understood.
one is this supply mode, but other is a very positioning mode that we believe is a bigger mode for us, right? Let's say, for example, you mentioned ET Money a couple of times, right? ET Money has FDs onto the platform, but maybe not everybody knows this. IND has, and there are a few more players also who have FDs, but the positioning is very different, and that's why Sometimes what happens, and there are some crypto players as well that we are hearing who are getting into FDs right now. But even if we know that, even with that crypto player, the money, if I invest, goes to the bank and I'll be 100% safe, you will not do that because you compartmentalize these investments very clearly. And it's not anymore managing multiple apps, right? That's not the problem right now. So I think positioning will still be our bigger moat unless somebody comes and builds a FD positioning onto this. Would be important questions, but not more with the existing players.
Okay, understood. You wanted to do a business with low customer acquisition cost. This Can you help me understand why you think this has low customer acquisition cost? To me, it seems like you will need to spend on educating customers that they can invest through an app. I mean, today everyone knows you can do mutual fund investment through a variety of apps, but for FDs, people would still go to a bank directly. So it does seem like you'll need to spend money to educate
Yeah,
customers.
I think that's the maybe some kind of mistakes that we were also running into, Akshay, that we also had a very similar hypothesis. And I'll give you one best example. We believe, and in our primary circles, everybody understands mutual fund really well. But the best behavior that we have seen during the NFO times of Navi Mutual Fund is that people have invested into the NFO for the 10, 14 days. And the day we got
NFO, what
is
is
the new
NFO?
fund offering, right? Any new mutual fund that gets in has a 14 days window that you can launch and you can subscribe the that NFO upfront. But the NFO, the mutual fund starts after the 14th day whenever it goes live. And we have
And a lot of people think of this like an IPO, I guess. There is
exactly,
some amount of
and
excitement
we
about.
have seen people withdrawing on the day of launching the NFO, thinking that they will make gains, right? But this problem doesn't come in FDs, Akshay. FD is such a well understood product. And I know some of the nuances that I've told you, breaking this, that, insurance, and there are these nuances. But for a very layman term, if you go and ask anybody about FD, the only question that they have is what is the interest rate, right? And maybe the secondary question is the bank, right? So that's so much it is ingrained into us that somewhere or other we have either done FDs ourselves, still have active or not actively doing right now, or somebody in the very close primary circle has done FDs. So this product is very well understood, and the history has been such that there are no issues that have happened when it comes to FD. There are a few banks have gone down and all of that, but वो भी RBI से कुछ आ जाता है. But very few examples of that.
Well, I want to kind of relate this to your first attempt of True Price, where you're saying कि सब्जी तो सभी
Right.
खरीदते हैं, right? And but then you wanted to eliminate the middleman, build a better middleman, and then you realize the existing middlemen are already adding a lot of value at a much
Right.
lower cost. That's where I'm coming from.
Yes.
So you're saying FD is a well understood product, it's a mass market product. I agree with you,
Yeah.
but the way in which people currently do FDs, you will need to spend money to educate them that there is another way.
Yeah. So basically, the other way that we are doing FD, the process why it's very simple. It's very same. It's actually not different process that they have to do. The only barrier that they had to cross is if I withdraw my money, like in your case, the only thing that I'll have to convince Akshay is that Akshay, will you withdraw money from ICICI and invest into the bank that I have onto the platform that you haven't heard? And that is the only barrier that we have to educate, which to our help, there is a tailwind of DICGC insurance up to 5 lakh. And it's to tell Akshay that DICGC insurance up to 5 lakhs makes your money in your bank versus these banks exactly same. Now the only question is the interest rate. You are getting 6.5, I'll give you 8.5. And the customers that we are talking to are so price sensitive customers, right? And you have seen, I'm not sure if you belong to that, I belong to a tier 2 city in Aurangabad, that every 0.5% or every few hundred rupees or few thousand rupees matter. And people will still go to DMart and people will still do certain things in a different way, just to say that it's not that those things will make a significant delta to them. We don't do that, but these people do. And for them, a 0.5%, 1.5%, your father is the best example of that, right? To do that. And that's where we believe that it has helped us a lot to take borrow trust from the already existing entities and just work on that.
Okay. Okay. Though I think it might be maybe a 1 or 2 year more journey to prove out your thesis that you don't need to spend on customer
Yeah.
acquisition. Right now, what is your customer acquisition strategy? How much do you spend? What is, give me a few numbers. What is your AUM? AUM would be the right term,
Yeah.
right?
Yeah.
Like
So our
for
AUM,
your business, like
yeah,
a
our
metric.
AUM today stands at around 300 crores, close to that. And this is in a matter of 5 months. Our CAC, maybe I'll tell you the cost separately, but our CAC today stands at one third of what it is for other fintechs who belong to some similar wealth category. Now, obviously, there is one reason that there are early adopters for every new product, and these early adopters will come at a cheaper cost. But this kind of scale that we have seen, I think we believe this will continue and not go beyond what we are currently imagining the cost would be. The major acquisition channel that we have is what these people do. The tier 2, 3, 4 people consume a lot of content online. So YouTube and content creation has been a very,
Influencers.
influencer has been a very big channel for us. And the other important channel that we have seen, which is still driving a lot of volumes for us, and we believe it has a lot more potential, is the referral, like sharing it with people. Let's say if I'm able to convince Akshay that Akshay, this is a good way, safe way to do things. Maybe he won't do, but he will definitely go and tell his father, and his father will tell 4 or 5 other people, because this makes them feel smarter about the investments that they do. And that's what we have seen, that in referral, we have people referring it within the family, in their primary circle, because in tier 2 the families are very close, everybody talks, cousins talk and everything. And this is one app where you can sit on a dining table and talk with anybody onto this. Not everybody will talk about Grow or Zerodha, because stocks, mutual fund, not everybody does. You want to don't not mention about your losses. So I think that these are the two major acquisition channel which has worked for us and which we want to double down on. The next thing is, how do you do it through already built channels? Like, there is so many physical distribution that has happened, and if we are able to build it through some of the physical distribution channels as well.
Okay, let's talk online first. So the you have the influencers being compensated through a fixed amount, or they get a like some sort of a performance fees. How does that work for you? Like, do they get a link where depending on how much AUM they generate, they get paid something, or is it like a fixed
It's a
promoter?
mostly fixed thing that they talk about the product, the simplicity, and whatever questions that people would have, and get bookings on that.
Okay, okay. And why did you choose that way
We
instead of?
because we honestly don't, and it's not majorly that we wanted to do that. Influencers also won't do that because it's a new product. It's just 5 months. They don't know
Okay.
whether how it will work. For companies like Grow and Zerodha and some other companies, it will be the value is already proven. They know that they'll be able to drive this. The brand is known. So it's also that facts that people do.
Okay, okay, understood. Your desired outcome would have been performance based and
Eventually, yes.
because that's more right, right. Okay, understood. And you would probably also be trying to do content based acquisition, like you said, you're doing like a search engine
Yeah.
for FD
Yeah.
rates. Does that contribute meaningfully to signups?
Today it doesn't, because it takes time to build that, and we have to build our authority and content accordingly. And what I have also seen across all the companies, that you try multiple things and nothing will work, but suddenly one small thing will work and do crazy volumes for you, right? So it's also a lot of experimentation that we'll have to do, and we are currently in that process. There are certain things that we know it works, so we're doubling down on that, but there are certain things that we are Not sure. So we're trying one piece after another piece.
I'm guessing for the FD interest rate comparison, like Bank Bazaar and a lot of these others would be competing for eyeballs along with you,
Yes,
I
yes,
guess,
and
on the
they
content.
do much better than us. The idea is how do we start building authority, and authority comes from multiple things, right? Like if the rates are updated on your platform faster than other platforms, right? If you have a larger banks than or the larger list of banks than the banks that we have, so some of these things also take efforts, but I think it has a very upward spiral, that one thing will lead to another thing, and then in 6 8 months 12 months it will show significantly higher results for us. So we also put a lot of effort on growing our SEO as a channel, but yeah, it's still very early stage.
Okay, understood. Give me examples of the offline distribution. You said that you would want to piggyback on some existing offline distribution
So see,
channels.
there are a lot of these players who distribute financial products in these cities, right? Examples are insurance agents, examples are LIC agents, examples are mutual fund
The financial
financial
advisor
advisors and
community, basically.
distributors. Now, these people cater to these customer base, and obviously they cater to only fewer products. And then everything else is part of that product only, right? Or that risk asset. Like mutual fund में कुछ और होगा या stocks में ही कुछ और होगा, or similar products they'll keep bringing. We want to give these people an opportunity to offer a safer assets as well. Obviously, what they will earn from here will be significantly lower than what they earn there. But this gives them to cover the entire portfolio of that customers, to have more touch points with that customers. So this is something that I have seen very closely with mutual fund distributor, though Navi was not on physical distribution. But this is one experiment that we are meaning to do in the next quarter to see how it plays out.
How much money is on the table? How much does the bank share with you?
So it ranges. Exact numbers will also change with the bank, but it ranges between a 10 to 15 basis point to, let's say, a 20, 30 basis point.
Okay. Okay. So essentially, it's like a very low margin, very similar to an index fund,
Yes.
I'm guessing, in terms of
Yes.
margin
Yes.
profile. Only at
Only
scale
at
would
scale.
you really
Yeah.
see
The only difference is the ticket
meaning.
size of these investments is much higher because people put in chunks um, versus, let's say, a 500 rupees smaller SIPs.
Ah, okay. 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 This 300 AUM, how much of that came in last month?
We have got around 50 crores in the last month.
Wow. So what are you growing at, like month on month?
Month on month, we are growing at a 10-15 because we are also conscious of a cost right now, that how the cost pans out. And there are certain experiments that we are doing around different channel of acquisitions and everything. So it is little shaky for these months. We just have to identify few concrete channels for us over the next quarter and then start scaling from there.
Okay. 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 And you've raised funds also, right? How much have you raised till date?
We have raised 5 million so far.
Mm-hmm. And how much runway does that give you?
See,
I mean, of course, runway depends on how much you spend on acquisition.
Yeah. See, as on today's spends, if we continue, I think we have a runway of 2.5 years. Obviously, but things will change as we start scaling, or we see the interest and we figure out more opportunities to build our revenue. But yeah, as of with the current status quo, 2.5 years.
So, what's the long-term vision? Is it only FD, or like what do you see yourself in a couple of years?
So, actually, we see ourselves to cover the entire aspiration, right? So, this tier two people still have a larger aspirations. These people participate in conversations of retire early. I want to make so much money by this time, and they will not be able to do this just with FDs. They'll have to take that journey of going from FDs to better bonds, to eventually more asset classes, and then maybe eventually stocks and mutual funds as well. Why not? So, but we want to grow with that and keep dialing up the risk profile and keep allocating or keep nudging the users to move to these asset class where they are able to grow and grow along with them over the next 10-15 years to have a very decent portfolio which spreads across the risk profile.
So I'm guessing the way to view the FD business is at the top of the funnel. Like it is low margin business, but it brings in customers who invest through stable money app, and eventually those customers can be moved into higher margin products.
Exactly.
Okay, interesting. um, okay, though, wouldn't it make sense to like raise another round and move fast, because this it's not a very defensible moat as
Yeah.
of now, right? I mean, with another startup with equal money can also reach where you have reached, like 8-10 banks integration, couple of 100 crores AUM.
No, that makes absolute sense. The only question that we ask ourselves before raising the fund is if we have really figured it out. Because, see, the new investments, new funds, new people will come with a lot of its own nuances, right? That the direction might change if you are not clear about the direction. So, we want to align on certain things that, okay, these are our acquisition channels, these are our next set of products, and this is how the revenue profile looks like. I think once we have that definition, and that won't take more than, let's say, 6 to 9 months for us to do that, and we are covered till that point in time. We believe once we have that is a good time to get somebody on board, because then it is just adding the fuel. We know which direction we have to operate.
So you spoke about Sachin's customer backwards philosophy.
Yeah.
Does that continue into stable money?
Well, it does. I think it has a lot of influence on what we do every day. And maybe some of the recent examples that we haven't spoken out yet is the feature that we are very bullish on, that we are building right now, is an emergency fund. And we believe emergency fund as a concept is the next best thing that has happened to emergencies after ambulance, right? Because emergency fund is where I think people have spoken in bits and pieces, but nobody clearly understands that, okay, why this is built for, how much should be an emergency fund for somebody, in what use cases you have to do this, and how do you use it in case of emergencies, right? So what we are trying to do is we are trying to put a nice feature where you can come and share some of your details about you, your family, your expenses and insurances and everything. And we'll be able to tell you tentatively that, hey, this much should be your emergency fund. And what are the features of emergency fund? That they have to be risk free, because it can come at any point in time, and you should not be in a case that, okay, the returns are low. This has to be liquid. Whenever you want it, you should be able to get those things. It has to be insured, right? It should not have any risk of other challenges. So with those things, we are building an emergency fund flow where people will be able to know that, okay, this is their portfolio. And some part of that has to go into FD, and that part of emergency fund, they'll be able to invest directly onto the app, where we give them flexibility to do it across multiple banks, better interest rates, safer assets because of the DIC's insurance, and easy liquidity because they can withdraw at any point of time. So this feature is what we are building. Actually, I think it's going live sometime mid of March. So yeah, I think that's one example where we have done it little customer backwards.
So this, if I understand, would be like a curated offering. Like you would curate and decide allocation, or like, is it okay? Interesting. The way how like wealth apps have like a curated
offerings, yes.
offering to decide what mutual funds depending on your risk profile, and so something similar you would do. Okay, very interesting, awesome, cool. So let me wrap up with asking you, if you have any advice you'd like to share with young founders.
I think the most important advice that I have seen is people waiting too long to do something that they really wanted to do. Either afraid to have that conversations with their bosses, or afraid to have that conversation with their family, or afraid to have that conversation with yourself that either I'm waiting for an idea or enough capital or this reason to happen. I believe you don't need enough courage to build a large company, let's say for a few years. You just need that courage to take that first step towards that. And to me, honestly, that first step or the courage that I had to gather was to have that first conversation with Sachin. That Sachin, I think this has been a good journey, but I have to now start something of my own. And I think from there, the direction, the path, and the momentum you will get, and then you'll keep getting enough on the way to keep building onto it.